Good evening, traders. Welcome to the short summary of the day. I want to explain my two trades. Just seen that on our Discord chats. They were explained by Ed, my first trade, and the second by Jeffrey. So my explanation will be not so different, probably very similar. I just want to show my own point of view, why and how. First of all, I wasn't sure if I am able today to take any trade due to that I am not still alone at home. It was very hard. Good for me that both trades were very fast. The first took 35 minutes, the second a bit over 20 or even 20. So fast transactions, very good day. I know that this is hard. Yes, there's the switch between intermediate and advanced, the way of looking for demand and supply. But as one of you already mentioned today, it is easy to find a high volume area because it's usually there was kind of range and a lot of candles appeared on this period of time, and I really love to use the market profile tool. We can see way more things than just looking for a perfect leg outs and indecision candles. Of course, I'm looking for this all the time, but if I'm not sure if price action was messy or is messy, and I cannot find a good leg out, a lot of wicks, or the base is like a huge pin bar and the base is made like 20 pips, this one tool gives us the beauty where the market rejected, where the biggest volume was played, and I like to draw my bases based on this. Yes, based on this tool. This one biggest area is also the previous week high volume area, because this was not so respected. Yes, here were two demand zone. I mean these value areas close to each other. So I marked the lower one after seeing this whole rejection. So when I see rejections like that, I could say that after drop, price started the accumulation phase. It even took liquidity, and yesterday we had the first high. Yes, so it was change on the structure. So we can surely say that it was the accumulation after drop. And when yesterday price was sitting on the below the weekly POC level, the orange one, it was also sitting below the supply zone based on the price action. Yes, so when price is hanging below supply, it is making it weaker. We already know this after intermediate part, and here are usually more experienced traders, and I found few times on the chart that someone mentioned that the supply could be invalid or weak due to a lot of time spent on the below the zone. And during the Asian session today or tonight, there was another high made. So it was for me the sign that yes, my focus, if I will be able only to take a trade, is the bias, is one direction. Because after accumulation and reaccumulation and even fresh high, so still price want to go up and up and up. So this was the first confirmation what to look for after opening the chart. Sometimes I'm getting questions, how it is possible that you are turning on your computer, you are sitting and you know what to look for. Yes, this is sometimes it's happening that the Frankfurt or London is in the middle of nowhere between two zones as supply and demand. But if we are already on some zone, this is just waiting for the pattern. Yes, you always should do the same thing, repeat over and over again our best trades. So I hope that you are taking notes after your losses and wins also, and learning based on this. So my two trades today were very similar to what I mentioned on the new videos on the advanced course. The first was based on equal lows and liquidity grab, and the second trade was based on absorption and retest of this absorption. For me, these were textbook setups. Just the one I took aggressive, but I found their logic, as I wasn't scared. Just really, guys, ask yourself if I know that you don't need to agree with me about this whole money topic, but if you're scared, would you enter if this would be for free, yes, or risking really half penny, yeah, just to check if this trade will go your way? And do not be scared about moving the stop loss. Some of you have ruled that after 10 pips, the other after 5, the other after profits. Don't be scared, give a room. My rule is always when I see the clean zone on the M1 is created, or sometimes on M5 when I'm trying to catch a bigger wave, and then I'm moving my stop loss, or when I see the clean imbalance on my way. So this is the way price level where I can accept the maximum drawdown, not drawdown, a reversal, to maybe feel this before continuation of my wave, of my direction. Don't be scared, because a lot of you are kicked out of the trade. If you are a beginner with strategy, do not always use this free pips. This is just what I use, and this is not a rule. Yeah, in the intermediate part, the stop loss should be placed below the measured candle, so the one with the imbalance. So it's not bad if you as a beginner are setting 5 pips stop loss. This sounds this still sounds crazy, right? To use 5 pips stop loss, or 6 or 3 or 4, doesn't matter. These are tiny entries. Yes, if I am getting 1 pip drawdown as today, this is 33% of what I am able to accept. So if I was before trading like 30 pips stop loss, it is like 10 pips drawdown. So this is something acceptable. Just you need to feel comfortable. Really, I'm just a guy who respect money, and I just saying this in my case, yes, that the loss need to be fully accepted. Or pick, nothing matter, doesn't matter. Yes, this is just money, and I am not afraid to take the entry. So really ask yourself if this would be free or just half penny or 1 penny your stop loss, if you would try. Yes, so if you answered yes, it means that your risk is too high, even if this is 1% or 0.5%. So don't look at percents, but on risk. Okay, let's switch to the M1. Sorry for a longer beginning, so introduction. The first one, when I found the entry just before London opening, a bit risky because London like to switch the moves, like opening bullish and then whole day bearish. I marked here on M5 the support inside my high volume area. Yes, it is clean support, equal lows. I don't look at this because these are my broker data. This is the gap. I also mentioned this probably on one of the videos on the intermediate course. I'm not looking at the gaps when I'm looking at the Asian low or high, because this can vary between brokers. But here comes my understanding. Yes, if even for any reason my broker put the price lower, this could be potential supply. Yes, because gaps are also it's like a move, and if this is broken and the move continued, yes, and make even new high, so it means that the whole Asian session were on demand. Yes, they wish was to put the price up and up and up. So I found that this is really good area to look, as the buyers were stronger even from the first minutes of the Asian session. Also, what I marked, I found here another things that the late New York here left even imbalances. The yellow circles are the high volume candles, so really high volume was played at the end of New York, and it was hard to break. Yes, the price was still above these. And how I set this, just quickly show you. This is the candle POC indicator or tool. I just changed the minimum volume to 120, and I set this to be visible only on M1 time frame. So when I'm switching the time frames, I don't see multiple dots due to the bigger plate volume on the higher time frame. I just want to see this just in case. Yes, I like to see the dots in the low of candle. When price is rejecting, it means that someone absorbed the other side, also on top of the wave, just to focus, because usually in the second window, when I am waiting for a setup, I am reading some articles or talking with you, and I'm not always have the footprint in front of my face, so I put the dots to see, like a warning that if something is happening like this, then I can switch to the footprint to see if there's reabsorption and the high volume appeared as a big disproportion. Okay, so no more blah blah. When price was falling here strongly, I found here the high volume, very high volume, and the imbalance at the end, which were broken. When the imbalance were broken and price Bitcoin down, not so wonderful. He was the move like calming down, just breaking this imbalance. I was thinking about entry here, and probably Ed and someone else and Steve joined exactly from bottom. Sorry, and I just waited longer to see if these high volume levels could be also be broken. I just read this as a liquidity grab, the big move to the downside with broken imbalance. So this is what I am looking for. Also on the guides channel, you can see the two options how to join the market. Yes, the aggressive and with the lower risk as retest. The second, as this is the lower risk, is not happening too often. Usually, if some pending buy orders filled on the demand, the move is fast and intensive. Yes, so I always trying to get this the first wave, and I should manage this by placing the stop loss below this demand. Yes, the last one above. But I found that this is my more interesting area, because I just accepted this is what I want to choose. I could accept to make the pullback to the lower demand because I wanted to see if price want to reach this resistance here. I wasn't aiming to the Asian high as here, just to this resistance without being greedy. It was even almost 21 pips, so I was happy with the target, and I was I just wanted to see this. If the price will close at 1-to-1, nothing bad. I know that this could be like a wrong risk management, but this is what I could accept at that moment. For me, it wasn't risking everything to hit my stop loss. It was the position was safe. So this is the example of aggressive entry after a liquidity grab, which broke the support as equal lows on the high volume area as a demand. For me, very, very clean. And about this stop loss and the belief about TP. Because of this fresh high, because of the overall market structure, this accumulation 2 days ago, reaccumulation yesterday, I just couldn't believe that this is the end. Yes, the price is turning back, and like 15 pips move or 18. I couldn't just accept this. This is so small wave to catch. And then the second trade was based on the absorption, so the other way. How I found this, I was talking with some of you, and then I saw the points here at the end of the candles. And what is wonderful, take a look on this volume. It's amazing. Yes, probably the highest played volume during whole day, during all sessions. Amazing. So big volume, and price was ranging. Take a look on the footprint. It was 1, 2, 3, 4, let's say 20 minutes consolidation with the highest volume during the day. Insane. So it was for me the sorry, I need to drink. So it was for me the absorption, yes, that the buyers were absorbing the sellers, and probably here the pending buy orders were also executed. And in this case, I entered the market when the volume came back to the low levels, and yeah, even this matched with the average 50% candle, which created the new high after break. Yeah, I was aiming a bit higher. Then I closed it manually. After almost 16 pips, I was aiming here to this equal highs inside the supply. But I didn't like how the volume played here. Yes, I will show you. Yeah, the volume were decreasing. When price was rejecting slowly, I was thinking, if what the hell, maybe this is just the equal high level, and push to the upside. Yes, with breaking of this demand. This happened later, 3 minutes after my closure. But yes, this is sometimes happening. So that's why we shouldn't always be so sure that some equal highs want to be taken. As I mentioned about this on the course, also on the mindset of the trader, that don't always try to catch these levels, because nothing is predictable here. And reading the volume, this is very important. When you are buying and the volume is going down, it means that the buyers are losing their strength, and maybe this move is almost done. So I maybe with luck, I don't know how to explain this. I just saw the decreasing volume, so I didn't want to cash this 3-4 pips more if I'm already happy with my profits. And here I managed this trade more correctly than the first one. I put my stop loss below this created demand here. There's very clean demand with the push, indecision candles, and strong leg out, which delivered the price to the supply. I hope that you guys are not so over trading or are not so confused if you cannot find the setup. But the most situation I see on the chat is that you were scared about entry, or you wasn't sure, etc. Please don't be so focused on key levels. It's because key levels are based on volume, based on point of control, based on Asian high and low, based on equal highs, lows. These are price levels. Just watch the price in the zone. If something here is coming, don't try to find aggressive entry based on key level. I feel that I'm advanced trader, but I'm not also using this so often. It's because it brings bigger risk of failure. I like to see something in the zone. Also, if you are not sure what is going on and why here was, for example, demand. Honestly, I also didn't have this markup because I just noticed that high volume appeared, price stopped, and then I switched to the left to take a look why. Yes, to look for a reason, because it's not happening every day that in the no man's land prices stopped and then rejecting. It must be something there. Maybe I missed some zone. Maybe I missed the imbalance pool or anything else. I just found here logic. Yes, the highest volume yesterday, and also it is the zone I used on the probably 2 webinars back when I call this messy price action at the opening of the session. So I found that this maybe was the reason why price made her liquidity grab and broke the imbalance. Always need to be some reason. Maybe even if this is not the best one, which I presented you now, but I believe on this. Yes, it was my own explanation, and I found here logic. I'm not sure, and I will never be sure if my way of trading is the correct one, because I never met the true institutional trader who was working for a bank, and now he's giving us secrets how they are trading. I don't know. I just asked once the guys from Footprint what they were looking for, and that's it. Yes, I cannot know how the big guys are moving. Maybe not big guys are moving the market. Who knows? Yes, this is just a repeatable story, and every trader is has based on this. And look for reasons. Yes, an absorption is also somewhere happening. Maybe you missed something. If you are not sure, don't touch the setup, because lower risk is from the zone. Okay, guys, thank you for watching. 2 more days with my son at home. I will try maybe catch something tomorrow. Friday definitely not, as Mondays I need to remember this rule. I am not trading these 2 days. So maybe tomorrow, if time will be good for me. And I need to ask my son if I can for 1 hour sit in front of chart. If not, I will be back definitely, guys, and after the weekend, maybe on the Sunday's evening, I will record short video about the overall view for Monday or Tuesday. But remember, I'm not good at predicting the bigger moves. As for whole week, I cannot do this. I'm a scalper and I'm just reacting of what I see. I'm very impulsive with my trades and decisions. I can just share with you my zones for upcoming 1 or 2 days. But definitely I will be active on chart, and I want to come back, guys. I just took this year 9 trades, 7 on January, 2 this month, and I'm hungry. Yes, I'm not greedy, but I'm hungry for looking for setup and especially managing the position and for looking if my setup was correct. Don't be scared, guys. Do not overtrade. Really be disciplined and print this trading plan. Yeah, print this and hang on the wall and listen to yourself, and your trading will be way better. Thank you for watching, guys, and see you as soon as possible. Have a good night.